Good Thursday morning. Another interesting day in markets. Not only did the S&P make a new high in the stock market, so did Nvidia. And part of the strength in the stock market today was due to financial news. The economy is stronger than many people were anticipating. Retail sales came out and they were greater than people had anticipated, and jobless claims dipped today. And you know what that does to Treasury yields? Treasury yields spiked up today because of the strong economy. Across the board, interest rates went up, and when they go up, you know what happens to the dollar. The dollar goes up, and now it's approaching 104. It's really remarkable. I would say 2 weeks ago, we were thinking it might break 100, but no, it's headed towards 104. And there's no ambiguity what happened. When those retail sales came out and were stronger than was expected, look at how the dollar spiked up. And when the dollar goes up like that, yes, crypto goes down. But I want to point out that it's not down very much. Bitcoin's only down 1%. And when you consider the reason for the back off and the magnitude of the back off, this is a relatively small back off when you have such a surprisingly strong economy, and people are now discussing the possibility that rates may not keep going down at the pace many had anticipated, and yet crypto's basically, I'm going to call it down, but not much. And part of the reason, in my view, that Bitcoin's not down that much is the Bitcoin ETF inflows hit a 4-month high, in part because BlackRock was talking about how Bitcoin can be viewed as an asset similar to gold, but distinct and very valuable, and they're saying that to institutions. Bottom line, though the rise in retail sales caught markets off guard and you saw the spike in interest rates, it's interesting if you go to the futures market. The futures market, for whether they're going to lower interest rates in November, hasn't really changed. Still, at the moment, 90% of the futures market participants believe that the rates will go down in November, the first week of November, 1/4 point. As the bull market in equities is continuing, as we have tech stocks making all-time high, and we have crypto not backing off as much as one might have thought, considering the magnitude of the strong economy, things look relatively positive to my eyes.